Welcome to the Traders Expo 2017 here in New York City. I'm Matt McCall, joined by Dave Landry of DaveLandry.com. Thanks for joining me, Dave.
Thank you, Matt. Glad to be here.
Let's talk a little bit about short-term trading versus, let's call it, long-term trading in the middle.
Okay.
Swing trading, I know you kind of fall in the middle.
I kind of fall in the middle in that I'm slotted as a swing trader, but I'm willing to stay with a position as long as it moves in my favor. And when somebody says, what's your holding period? I say, well, hopefully 10 years, maybe even longer. But I realize it's not going to last that long usually. But you can only see so far out. It's akin to predicting the weather. You can only predict so far out. If it's cloudy and thundering, you know it's going to rain soon. But you don't know if it's going to be raining this time next week, next year, whatever. But with trading, you can only predict so far out, no matter what anybody says on TV, obviously. And so what you do is if you get the short term right, take a small profit off, a swing trade profit off, and then raise your stop up to break even, and that way you have kind of a free position, so to speak, and then let that stop gradually loosen up. You're making the transition from trader over to trend follower. Okay. As a pure trend follower, you're going to be wrong probably about 80% of the time. But if you make that transition from trader over, your accuracy is going to be a little bit better, and then your drawdowns won't be so abysmal because you're selling into it. So that's where the money management really comes in to play.
That makes perfect sense. I mean, because I get the question all the time too, what's the average holding period?
Right.
How long am I going to hold this trade?
Right.
And really, you don't know. You must let the market talk to
Absolutely,
you.
absolutely.
And so for you to determine that, then you're using the charts to come up with that?
Yes, absolutely. Looking at the volatility of the stock and placing your stop outside the volatility. Now, there's a popular method that says we should all use an 8% stop. Well, that's like saying we should all wear a medium-sized shirt, something my Fed hasn't done in a long time, you know? So we might have a stock that has a 34% stop, but if you look at the chart, it's only that far away. It's really not that far. And then by just having that stop in place, it'll keep you in the trade or it'll take you out the trade. And just don't overthink it, don't micromanage yourself out, let the money management work.
So when you look at the charts and you determine these support levels,
yes.
Are you looking at moving averages, trend lines? What do you look at?
I'm not looking at moving, well, I do occasionally use moving averages, but not for support.
Okay.
Every now and then, like an overall market, I'll plot the 50, it begins to correct a little bit just to make sure it's still above it. But I'm using like a base, like say you have a base breakout, I might have a stop back in that base because if it breaks out and I play a pullback, comes back to the base, I know I'm wrong. If I'm trading a transitional pattern off of like a major low or major highs, I'll put it a stop at maybe at that new high or at that new low because as a trend follower, I know I'm wrong at that spot. So, and then obviously the volatility, as I said earlier, if a stock bounces around 4 and 5 points a day, you can't use a 1 or 2 point stop. People think that you have to use a tight stop, but that almost guarantees you failure. And a lot of times I've helped a lot of people just by saying loosen your stops up a little bit and you'll start catching more trends. But trade at a smaller size to adjust to it. So.
That makes sense. All right, so last question before we let you go, I'm going to ask everybody this. Bullish or bearish right now? Is a Trump trade over?
Well, I am known as the trend following moron, and right now the market is making new highs. Everybody's saying the Trump rally. Well, you don't want to confuse the issue with facts sometimes, and it's like, is the market going higher or lower? You know, and the market did a lot of things, like gun stocks went up 900% under Obama, and he was an anti-gun president. So you got to be careful with these big picture ideas. Keep it simple. If the market is at or near new highs, err on the side of a longer-term trend. Give it the benefit of the doubt. So right now, as long as it's going up, it's going up. We're trend followers. We're not going to try to outthink it or figure out why this is happening. I often say, I even bought the domain, don't confuse the issue with facts. So.
You should sell it to a politician, maybe.
Yeah, that'd be awesome.
All right, Dave Landry, thank you so much.
Thank you, Matt.
Check him out at DaveLandry.com.